All right, in this video, we're going to go over candlestick patterns. And this is just something that you can add to confirm what price is going to potentially do at a certain area. Me personally, I don't trade these candlestick patterns by themselves, but I use them as confirmation for a trade. So let's get right into it. I'm going to go over these patterns that you see right here. You might want to take a screenshot, save them for later, just in case you forget them. But the first one, we're just going to go left to right, is the bearish engulfing candle. So basically, the bearish engulfing candles are personally one of my favorite strategies. Well, not strategies, candles to confirm a trade or look for a trade. And the reason being is because engulfing candles let me know where the big moves in the market are happening. So if I see something that's uh, like a movement happen and then all of a sudden an engulfing candle appears, and then the move starts to continue in the same direction as the engulfing candle, I really like that area for another trade. So an engulfing candle is going to be identified by one small candle before it. Could be, this is a bearish one, so this is what happens is you got a green candle or an upward bullish candle followed by a bearish candle, and that bearish candle has body. You see this, the green and the red area are considered the bodies of the candle. That candle is bigger than the first candle. So the second candle is bigger than the first candle. So that's the bearish engulfing candle. The bearish tweezers, I like this one because basically it's letting you know that there's a potential end to a trend. So the reversal or the change in trend hasn't started yet, but this is an area or a price pattern to where now I'm looking like, okay, something could potentially happen here. And what happens is price comes up and makes this candle. This candle comes up here and then it sells. So there's people pushing the market back down here and it sells. And then the next candle happens. The next candle opens here. It goes up again, but then it sells off from that area again. But this time it sells off further than this one. So what I mean by that is, notice how this one is a green candle. That means price had opened here and closed there. This is a red candle, so that means price opened here and closed there. So what happened is the selling pressure was bigger on this candle than it was on that candle. And that lets me know that the sellers are getting in control of the market. Then you have the bullish engulfing candle, just the same thing as bearish, but it's letting me know that there's a shift in the market happening in this area. And what happens, what I like to use for engulfing candles, if there's a downtrend coming down here, it gives you this last bearish candle, and then right after it is a bullish candle. And from there, the market continues up. So that's if that happens, I really like looking at this area for another trade. Bullish tweeze is going to be the same thing. There's a downtrend. The market opens here on this candle, goes down here, but then there's pressure making it go up to close there. And then when this candle opens here, there's another attempt to sell, but then the sell is immediately rejected. And not only it gets back to where it started, but it continues in the opposite direction towards going up. So the bullish tweezers are an indication of price may be reversing in that area. And just to keep in mind, you always want to look for these at zones, at price zones, or resistance or support zones to support your decisions in buying or selling the market. Dojis are going to be um, formations that usually mean is neutral, but there are some dojis that can also mean a reversal in the market. So if we look here, this doji, you hardly ever see a doji like this, but this means that there's absolutely nothing going on in the market. There's no buyers or sellers present. And when I see that, that lets me know that, hey, it's not time to trade that pair when I see that doji. When I see this one, what this lets me know is that that price could potentially go up. And what I mean by that is that if you think about how a candle is formed, you have the open, you have the close, and then you have the highs and the lows. So what lets me know here is that price opened here, it went down here, and it was rejected, and it went back up to close in the same spot. So what did price tell me with this candle? That price attempted to sell, but the sale was rejected. So it might be an area to where a buy might continue, or it might go up in an uptrend. This was the opposite. It opened here, it tried to go up, and the buy momentum was rejected and went right back to where it started. So this doji could be a selling indicator doji, to where it might be a selling momentum that happens right after this. This doji is a neutral doji, but this one is different from this one. The reason being is because both attempts were made in the markets. There was an attempt to go up, there was an attempt to go down, but neither one were successful. So it ended in the middle. And that lets me know that there's a change that's going to happen, but we don't know which direction. It can continue up or it can continue down, but we don't know which direction is going to happen. But there is a change that could happen in the market, or a momentum shift in the market. It could be a continuation to continue in the trend, or a reversal to reverse the trend. This is an evening star. So this is a 3 candle pattern. So this lets me know that, hey, there was some strong bullish momentum, uptrend momentum, and it got stopped. And what happened is the selling momentum, or the bears, and the bullish momentum, or what they call the bulls, were having a tug of war here. And it was a tug of war here, nobody won. And then this lets me know that the bears had won, meaning that the selling pressure was stronger than the buying pressure. So this could be an indication that price is going to go lower. Hammers. Hammers are really good, either whether it's bullish or bearish. If it's going up like this is letting you know that price had tried to continue selling, just like with the tweezers, just like with these dojis here. Price tried to go in one direction, it got rejected. Price tried to go another direction, and got rejected. Same thing with the inverted. Price tried to go up here, got rejected. Tried to go up here. Morning star, strong downward momentum gets stopped. There's a tug of war that happens between the bulls and the bears, and the bulls win by going upwards. And then the same thing with a shooting star. Now, the shooting star and an inverted hammer may look the same, but the difference is that the inverted hammer comes after a downtrend, and the shooting star comes after an uptrend. And I really love shooting stars, are one of my favorite confirmations for a trade that's about to happen, especially after I've mapped out other confirmations or other criteria for a trade. This is like one of my favorite final confirmations. Just like these type of dojis, this is letting me know that a shift is happening. It's a strong shift. Spinning tops. Spinning tops are really good because there are 2 dojis, and it's letting you know that there's an extended battle for supremacy in the market, whether it's going to be bullish or bearish. There's an extended battle because these are 2 candles. It could be 2 hours, it could be 2 days, but there's 2 separate time periods to where there's a tug of war happening. And this can also let you know the end of a zone, or not the end of a zone, the end of a trend, or the emergence of a zone in the markets. When you start to see a bunch of these in one area, it's a pretty good chance that this is a good price zone. 3 black crows. So 3 black crows just basically means that there's a shift in the market, and the market is heavily going in the opposite direction. Usually when I see this, I know that the shift is already confirmed, and most likely you're just going to look for a way to continue downward. 3 inside down, it's just a broken up form of an engulfing candle. So basically, if you look at this, the size of this engulfing candle is basically 2 of these put together, 2 of these. So if you were to combine these two candles, that would be an engulfing candle. So that's the way I think about three inside down. It's like a weaker form of an engulfing candle. And it's best when it's after an uptrend. Three inside up is the opposite, where there's two candles that engulf the body of the last bearish candle. Three white soldiers, big shift in the market. So you don't have to necessarily trade all of these patterns, but when you know to identify, a few patterns and know what to expect when these patterns happen, what to look for, you can maybe just pick maybe three or four and really trade them. For me, it's engulfing candles, dojis, and hammers. Those are the three main things that I like to trade. But all of these work. It's just for me, those are three main things that I look for. I could also look for morning stars, especially when it comes to swing trading. These are really good. And spinning tops are good for swing trading as well, as far as identifying a price reversal zone. So, whatever your trading style, these are going to let you know what could possibly happen. You can pick a few to really get good at and really make money trading these candles. Y'all have a good one.